Hello, friends. Good morning. Hope all is well. Hope everyone is doing good. Hope all is well with you and your family. Hey guys, this is Ruby Singh with Real Estate News School. As you know, we've been covering a lot in real estate and also, what is the process of any real estate. When you're planning to sell, you're planning to buy, or you're planning to invest, right? And there's so many, videos and so much information on this channel that I've been covering in detailed process from A to Z of the real estate. Okay. And also I want to say thank you from the bottom of my heart to each and every one of you for all your likes on those videos, all your wonderful comments, guys. That definitely makes my day. How, this channel is helping you guys so much, how you are sharing, these videos with your loved ones, with your family, and friends who want to learn about real estate, and so they can avoid, you know, being taken advantage of, right? When they are planning to buy the house, or when they are planning to sell the house, or when they are thinking about, investments, right? So I've been covering all that in the details, right? As you know that. And if you haven't watched those videos, previous videos, please go back and watch those videos. And I also have playlists, those played under playlists that cover all the topics you want to learn, right? There's so go back and watch those playlists, right? That I have on this channel. So hope all that helped you, and I know that with your comments, your likes and subscribers, again, thank you so much for all that, right? So as you know, we've been covering about buying process, how you can buy the house if you're a first time home buyer, or if you are downsizing and you're buying a smaller home, or kids are moved out of school and now you want to buy you're downsizing, or if you're just got married, you're looking for the house in good school neighborhood or like that, right? Last section we covered about do's and don'ts of home buying process when you're writing the offer, or what goes after you write the offer, and then inspections and appraisals. I covered in detail in the last section, so if you haven't watched that, please go back and watch it. So let's another issue it comes, or it's very important part of home buying process is getting the home loan. Okay, because the decision to buy a home, let's cover that today. When you're planning to buy the house, or how you're gonna pay for it when you're shopping for the home loan. Okay, that is the decision that when you buy a house, when you're buying a home, you put you into the realm full of things you have not dealt, with prior, especially if you are, renting for a while your house and you never bought a house before, and you never own a house before, right? Owning a house, that bring a whole new experience than renting, right? Either apartment or a house you are renting, right? Because you have to consider taxes, you have to consider mortgage, you have to consider interest on that mortgage, right? And the insurance of that property. Because when you're looking to purchase a home, it's important to understand what can deduct and what can't deduct. There's a powerful piece of information many home buyers they overlook is the effect of mortgage interest on their federal income tax payment. Because the mortgage interest is deductible and a powerful financial planning tool. You calculate the amount of mortgage interest deduction and it include that is in your annual financial planning. Okay, that make a point of checking, Internal Revenue Service, which is called IRS form. It's a 1098 form that you get from the lender, right? Um, at the end of the year, when it's you are trying to do, when you're doing the tax, okay, for that year. So this form, it shows the amount of mortgage interest that you paid. Some of the non-deductible items that include home repairs, general closing charges, homeowners associations dues, right? As well as, the property hazards, insurance, the premiums you are paying. So these are the non-deductible items from your when you ready to pay the taxes at the end of the year. So because getting a loan to purchase a home, it can be a, sometimes tricky business for the lender also. And there are terms one might find hard to understand. For example, the term mortgage points, okay? Not not everybody knows, right? Unless they bought the house, they don't know what are the mortgage points, right? That mortgage points, guys, it refer to the interest that's been prepaid. It's possibly to lower your mortgage loan interest rate or when you buying up points. Mortgage points or discount points are fees paid directly to the lender at closing in exchange for a reduced interest rate. This is also called buying down the rate, and it will decrease your monthly mortgage point because 1 point cost, equal to, when it says it, sometimes lender they say, well, it will cost, this point, this many point. The 1 point cost is equal to 1% of your mortgage amount. Okay, because like for example, how we can calculate 1% of the mortgage is, 1 point is $1,000 for every $100,000. Okay, because essentially you pay some interest upfront in exchange for lower interest rate over the life of your loan. In general, the longer you plan to own the home, the more points that will help you save on interest over the life of the loan. Okay. Um, like for example, Bank of America. Okay. They uses a chart illustrating points using a loan amount of 200,000. Okay, because it's possible to buy the point to ensure the interest rates are low when you are getting the loan. Buying the points can help you down the line by guaranteeing that you will save money, right? When you upfront you buying those points. And if you don't know much about it, ask your lender, let them explain that to you, especially if you plan to stay in the house for an extended period of time. However, the amount of cash you will save by buying the points that depend on the number of points you buy. For instance, if your mortgage is 200,000, if you buy 2 points, you will owe 4,000 when closing on $200,000 mortgage. Okay. Further, that can also relate to taxes and property ownership is that once you own a house, you probably, uh, of course, you are a property owner with the tenant, obligation. You have to pay property taxes, right? The usual method of paying property taxes is to escrow the amount of annual taxes within the mortgage payment, because the mortgage servicer will pay the taxes as they are due. When buying a house, your lender will calculate the total amount of real estate taxes as well as the number of days in the property tax year that you were the owner of of that property, and escrow that amount, adding it to the mortgage payment. So people have been known to spend months looking for the best possible home and eventually find a, you know, good home or the home they are looking for. However, many of these individuals sometimes they fail to understand, the importance of finding a good loan also. In the end, the new homeowner has a nice home, but they are dealing with the bad mortgage. So not many people have the capability to buy a house for cash. Most people will require a mortgage. Therefore, you not only need to go shopping for a house, you will also should go shopping for the best loan deal, because there are different type of loans out there, and it's the best to check several and then compare them. Um, it will be a better chance of securing a mortgage that won't be a burden in future for you. It also means you have an opportunity to save money at the end of each month, because shopping for the best loan on your own can be daunting experience, and it might be difficult task to accomplish by yourself. To overcome the hurdle, it's recommended that you hire a mortgage professional. For many of the same reasons you should engage in real estate professional. So if possible, you should engage the professional before you start searching for that house, right? And another task you should work on before begin looking for a house is organizing your credit issue. If it's important to ensure your credit is in order, because making any mistake at the junction can take months to correct, and it might even end up sinking your chances of owning a house, because after getting your credit in order, the next step is to research on the house that you can afford. This is simply today because since many online tools that can help in doing these kind of calculations, these tools actually they will give you a rough idea of what's getting yourself into, calculating your income, your expenses, your mortgage affordability. So because sometime even mortgage professional, sometimes you cannot rely on that, that they will determine the best loan for your needs, after all calculations are done. Finding the best mortgage deal is made even before complicated, by the fact that the mortgage rates, they change daily or even, several times in a single day, guys, you know. So one can get a good mortgage deal from a mortgage broker or a bank or a mortgage lender. It's up to you as a buyer. It depends on your situation, on the situation, okay? Because however, if you're going to buy a house and your down payment is less than 20%, you're going to need a private mortgage insurance, right? That can add, sometime $100 per month for a home valued at 100,000. To find the best mortgage professional to guide you through the process of buying a home, seek advice from, real estate agent, colleagues, or friends, or banks are generally known for having a fewest mortgage options because their products are tailor-made to suit the bank's interest. Okay, because however they can also be more flexible as they are in the ones, lending the money. If the buyer owns other substantial assets, making a deal with the bank will not be a complicated process because mortgage brokers are known to offer the largest amount of options, right? Working independently, and with several financial outlets, brokers can find the best loan for the buyer from different lenders. That's what mortgage brokers do, while the banks, their interest is what is bank's interest. They will only give you those kind of loans which fit, and it benefit the bank's interest. Um, So now when you identify the house that you want to buy, okay, you have a professional mortgage advisor. How do you get the best mortgage deal, correct? Because the first step is comparison of different interest rates. It's easy to get quote from the companies since most of these companies, they offer these services online. However, as the buyer, you should be careful not to just compare interest rates. The best option is to compare the interest rates as well as all the fees, including origination fees, points, and any other fees that lender might include in the deal. Okay? Because any loan, it's regarded as a no-fee loan means that all the fees that have been included in the rates, and as the buyer, you should make a point of, nothing that. You have a responsibility of ensuring you understand every aspect of the mortgage deal. Therefore, it's upon the buyer to interview the person handling the loan. Another important step when buying a home is, getting your credit report. The purpose of getting the credit report is, not just to give you a chance of getting the best bargaining terms, but helping you know where you stand, It's important because you might find that you aren't sometimes credit worthy, for the lender, that will it will break the deal, correct? So if you find yourself in that situation, it might be a good idea, guys, to use the credit repair, to make sure your credit is working correctly. You search for reputable credit repair company because there are credit repair companies that are either not so good enough or they charge too much. The company will help you repair your credit. They will, sometimes assist you in correcting any mistakes that might be in the credit report. As a new homeowner, it would be wise to remember that monthly mortgage payments aren't the only expense that you will be paying, but you will be paying property taxes, homeowner insurance, maintenance costs. So therefore, you should ensure that you have, budgeted for all these issues and understand that once you have the house, it will become the focal point in your life, because that means when you purchase that house, you'll be investing in surrounding communities as well. You'll be commuting to work from that house. Your kids will be going to school in that community, and other, activities that your family will be involved, revolving around that community. So all these considerations should be in your mind, before you are ready to make the deal or close the deal, right? Because the buyer, they should, you know, as a buyer, you should also make it point of being involved. As it's, it's a complicated job in getting, you know, for even realtor agents, to get the best deal for their clients. And therefore, as a buyer, you should also make effort to ensure that you are also part of the whole process, and you are involved in every step of the deal, because research, it has shown that the most people spend more time, sometimes shopping for the cars than spend thinking about the mortgages. As a result, many people, they seeking to buy homes, they end up paying, more in closing cost or higher interest rate, than they might have, because they didn't bother doing enough research, or they didn't adequately shop, the mortgage market. So the real estate mortgage interest rates that can move up and down quickly due to various financial and mortgage factor. Okay, because the even changing rates can confuse sometime, and it confuse so many people, because timing is important, correct? For instance, one day the rate is 5%, the other days it could rise to 6%, right? So you're like, what? I just thought it was 5%. So many people, they overlook the shopping aspects, and tend to approach a single lender. As a result, these people will probably get their dream home, but it may come with substantially higher monthly mortgage payment. And if it appreciate the adequate research, you know make sure that research has been done. Also, guys, there's like so many home programs, for first time home buyer, like, um, because I would say around 67% of Americans, they do own their own home. You know, they still leave a huge number of uh, people who cannot buy their own house at this time or sometime, because often they can't sometimes afford it due to the job, or some other conditions, or the closing cost, or they don't meet the down payment requirement, or credit issue, or the income issue, or the tax issue. There's so much goes into, buying a home. So, the US Department of housing, the urban development, is called HUD. They provide actually billions of dollars every year, to the housing grants, and turning the homeownership dream into reality. So if you're buying a home for the first time, you can file for a buyer's grant. Okay, because they're like national, state, local programs and grants that are available to the first time home buyer, because these programs that they subsidize, it can help you cover the portion of acquisition cost, or it can include the down payment, and it allow the buyers to get a higher percentage of loans or to finance. Okay, so there are so many grants for first time home buyers. Grants can be like just as it could be as important, guys, as loans. When buying your first house, your first time grants for home buyer can be significant source of funding. Unlike like loan or debt or a grant that won't work, have to be repaid. Like often these programs are aligned in areas where government want you to capitalize on um, revitalization of the community, right? But because it's a sometimes it's a like an expensive option for first time home buyer, right? So these grants are they are both good for home buyer and for the community, because most grants, guys, it help you to connect with down payment or the cost of the closing, because there are also programs that provides funds, for other purposes in the process of home buying. Many of like these programs that offer, loans that don't have to be repaid, or sometimes it's very helpful thing for someone who has all the elements of successful home buyer, correct? So, and they have all the element, but they do need some help or down payment assistance. Okay. So given the lower requirement for the down payment, or a federal housing administration, which is called FHA loan, it's natural, because if not a perfect, because it's a fit for many down payment assistance program. It's available to help you on your way to buying a house, because most federal grants, okay, most federal grants, guys, are targeted to the first time home buyers, and they are intended to help those individuals who started towards home ownership, because these grants, it shouldn't be expected to cover a large percentage of new homes cost. However, like most cover, like I would say 10% of the home's value. You can be expected to help pay for like certain expenses, or closing cost, um, something. It can be very, these around 10% of that, it can be very helpful. So for example, like down payment with FHA loan is around 3.5%. Okay, and that is of the cost of your home. Okay, that's what it is. And like current FHA loan guidelines, it allow for the down payment portion of your home loan to come from several different places: a gift, or a personal saving, or a tax return, or a down payment assistance program. So down payment assistance programs are funded like at the city, county, state level, and due to funding, the assistance program, they are ever changing, because each program, it operates on its own budget, and it operates with his its own, like their own self requirements, because the credit score, the income level, there's so many factors get into the eligibility, when you're trying to be for your down payment assistance program. Okay, so since like home buyer, they grant are like those grants, guys, they are usually to be used toward the purchase of new home. Okay, because there are qualifying rules for these kind of funds, and you know those grants won't be given to anyone who doesn't qualify for the mortgage. You have to qualify for the mortgage in order to qualify for these kind of grants. Okay, so that is the point you have to keep in mind, because different states, they have different programs, they have different conditions for home buying grants. Because one thing they have in common is that all 50 states have, grants or the first time home buyer program. So do your research and check what grants are available in your state, in your community you are planning to buy. Okay, because these are steps to you have to follow when applying for the buyer grant. Like you have to find a home buyer grant, that fits you. Okay, and check the requirements of that grant program, because finally it's you have to find the approved lender and fill out all application forms correctly. The HUD website, the great resources, you know, you have to check all that sites, okay, um, if it's qualifying for the grant program. And also keep in mind there are other options, like you can also work with the IRA, right? Like penalty free IRA, that's if you are a first time home buyer and you are planning to withdraw as a first time home buyer, you are eligible to withdraw like 10,000 during the lifetime for the, like, usually that's what they qualify for the person, sorry, for the individual retirement account. Okay, because without paying the 10% penalty for withdrawing before the age of 59 and a half, because assuming, like, there are, you have to check all requirements are met, all guidelines are met. It goes a lot into it, because the biggest requirement is that money must be used to buy or build your primary residence, not your vacation home or your second home. It's your primary residence, in order to qualify for this. And if you have like a traditional IRA, you'll have to pay income tax on money withdrawn. You know that, okay? So that you have to talk to your CPA, your accountant, or your IRA. They can explain you better on that, okay? Because they're in that work and they're professional in that. So, well, I know that the Roth IRA accounts, however, they aren't subject to additional taxes, as they are like funded with the money that has already been taxed. That 10,000, amount of lifetime amount that can be withdrawn penalty free from the IRA is like, it's specific to for each individual, and it could mean like couple could withdraw up to 20 grand. Okay, um 10,000 each individual. Okay, so if you're a couple, you're planning to withdraw, again, check your guidelines, guys. Again, check with your CPA, your attorney, your IRA people, check with them, please. Okay, so but what I know that I, 10,000, it could be individual, or if you're a couple, up to 20 grand, 20,000. So the person withdrawing, they also doesn't have to be like future homeowner. Okay, because a person under the age of 59 and a half also can qualify for the tax exemption if they are helping a child, they are helping their grandchild, or they are helping their parent or another immediate family member, you know, to purchase their first home, because the money withdrawn from either traditional or Roth IRA, it must be used within 120 days or it becomes subject to penalty. So be sure to plan ahead. Okay. So instead of, depleting your IRA savings. Um, it's like a risky business, guys, and it might over time be more cost effective to keep the money, earning interest or rather than applying it to your down payment. Okay. So make sure you talk to, again, I'm saying that talk to your CPA, your attorney, your accountant, your financial advisor. They can explain that to you, your financial advisor. They can explain to you better, for your specific situation. Okay. Um, Another point I want to make, guys, that homeowners, the tax break, okay, because the mortgage interest deduction, this is one of the most beneficial tax break that home buyer can take advantage of, whether they are first time buyer or otherwise, okay, because the IRS, it allow you to deduct from taxable income the interest you pay to your lender. Okay. Home mortgage interest is one of the largest deduction for those who itemized. Lenders will also report your mortgage interest on the 1098 form, sent uh, annually. So the mortgage interest deduction, usually the abbreviation in lending field, they call it MID. That's a valid for mortgage debt up to 750,000 or mortgage debt up to 375,000, like if you're married, okay? But if you're filing separately. So home buyer, they can receive a large benefit in the first year after buying as the first repayment. They have the highest interest. So claim the MID benefit, home buyer will have to file itemize on their tax return. That you have to keep in mind. Okay. Mortgage point, I know that we covered that before, but I just want to brush it up again for you guys that discount point or mortgage point, they're, also known as the same. They can you can say mortgage point or this is the same word. They there are fees you have to be paid. It has to be paid directly to the lender at closing in exchange for reduced interest rate. So the cost of discount point is like equivalent to 1% of your mortgage. Okay, like 1,000 for every 100,000. So discount points, it involve prepaid interest and it can reduce your total mortgage payment. Okay. So it's 1% is equal to $1,000. Okay. For every $100,000. Okay. So discount point that involve prepaid interest and it can reduce your total mortgage payment because the interest rate on your mortgage typically lower by 0.25 with each point you buy. So if you elect to do this, the fee for the point is tax deductible for the year in which you paid them. Okay, that's the year you paid them. Okay, that's the only time. So like assuming like you obtain your full-time year-round home opposed to like second home or vacation home, um, you have to check that with your lender about that on those mortgage point discount points. Okay. um Another point I want to bring, is a mortgage certification. The mortgage, it's called mortgage credit, MCC. Um, it's a mortgage credit certification. The mortgage credit certification, MCC, is another program that will help thousands of first-time home buyers secure the tax break. The IRS-based program, it's aimed at like helping lower income groups, okay, to afford their first home by essentially like, subsidizing the loan. So the MCC program that is actually designed to help first time home buyer offset a portion of their mortgage interest on new mortgage to help them mortgage to qualify for a loan, because you know that the tax credit, it's not a tax deduction. Mortgage lender will often incorporate the estimate amount of the credit, so prorated on monthly basis. So add additional income to help the potential borrower to qualify for the loan, because depending on the price at which you're purchasing the home, you can get back up to like 30% of the interest you pay as a tax credit. The program is like administered by local authorities, and it can vary according to the state where you live and where you're planning to buy the house. So to qualify for this tax credit, you will need MCC issued by the local government, because your loan officer, talk to them about this MCC credit certification, credit certification. So I'm sure they will know about that. Okay. Um, so another deduction you can make is home improvement, because when you're improving your home, it will not only add to liability and the comfort, livability and the comfort. It could also like earn you tax deduction. Okay, in multiple ways, you can use a home improvement loan to finance the cost of improvement on your primary or your secondary home. Okay, because it doesn't matter for when you're getting into the home improvement. Um, you can like, because it will, you can then qualify, likely to qualify, mortgage interest deduction when you do this kind of um, improvement. But make sure you talk to your lender about that. They can explain that to you better. The interest on a home improvement loan, it's a deductible. It's up to like 100,000 in debt. So be sure to keep track of your home improvement cost when you sell the property. If you're selling, price of your home is more than what you spent to procure the extra amount, it will be considered as a taxable income. you know so you can also like add improvement cost to the value of your property to reduce the amount of like this kind of taxable income. This can help you save money in taxes following the sale. So home office deduction, like if you are like self-employed and you work from home, the amount of space in your home, that is also deducted. Okay, it's towards your business tax deductible, because this kind of deduction, it will include loan interest, it will include like insurance payment, utilities, repair, any improvement and more. Okay, so people like who are now filing as a self-employed are ineligible for the deduction. Okay, because there are other specific guidelines for taking advantage of this kind of deduction. So check with your tax uh, you know, attorney or CPA or accountant, okay, before you filing those kind of uh, tax deductions. So make sure you talk to them and check with them that you qualify for it. So you don't, get audit, you know, by our IRS, okay, if you didn't qualify for it. So there also another point I want to bring another is I know that home energy, that's also a tax credit because IRS, it reward homeowners who make effort to create like eco-friendly homes, solar power, or particularly, it's lucrative. It's a like installation of a solar power system or solar hot water system. You can earn up to 30% federal or tax credit until the end of like 2019, like after 2019 the credit fall by the few percentage point. So each year until 20, I think it's up to 2022, when the credit is scheduled to expire for those kind of tax credits. So unfortunately large amount of federal energy credit already expired back in 2016. But that doesn't mean, guys, that you should give up on eco-friendly environment, because there are still many states and local tax credits, incentives and rebates they offer, upgrading your home's energy efficiency. Okay. So hope all this helped, guys. We covered a lot today. Um, and there's so many programs, the grants of first time home buyer. Um, check the HUD uh, gov. And then when you shopping for the home loan, what kind of loan you should qualify, how you should qualify what goes into it, you know, when you're qualifying for the loan, how you can save money on the points, right? So we covered a lot. And again, thank you so much, guys, for being here with me. I really appreciate you guys. And again, thank you so much for all your likes, your subscribing, your wonderful comments. That always makes my day when I see that, and how you guys are sharing, and how, you know, this channel, how these videos are helping you and your family or your friends who are interested in home buying, or they want to learn about real estate, how it's helping them. Okay. So I will talk to you soon again. This is Ruby Kaur with the Real Estate News School, and I will talk to you soon. Till then, take care, friends. Goodbye.